Welcome to Trulyfit, the online fitness marketplace connecting pros and clients through unique fitness business software.
Bob, thanks so much for joining the Trulyfit Podcast. Why don't you give my listeners a background, a bio on who you are, what you do in the world of finance, your book, and anything else you want to talk about here?
Sure, absolutely, Steve. Great to be here. So I am a CPA. My bread and butter is I have a CPA practice that I've built up from ground up. I originally wanted to go to law school and took accounting to bump up my grade point average. Then I made a few attorneys and thought, not so much. I also, at the same time, to supplement my income, I guess, I was doing stand-up comedy. And so I have a lot of creative folks on my radar. And I started doing tax appointments that turned into therapy sessions. And so it made me realize there was just so much more going on than 2 + 2 is 4, or put away 10% for your taxes. Realized there was a lot of unconscious money blocks, money beliefs that I was also doing. So I come to this not having done it perfectly. I was giving out fantastic advice and not following it myself. And just over time, I started making my adjustments, working on my mindset, working on the practical stuff, putting stuff aside for savings, having that emergency fund, all that basic stuff, but also looking at the mindset of, do I deserve this? Am I worthy? All those things. And so I wrote a book to really start the conversation around money, to help remove the stigma of shame around financial literacy and let people know they're not alone.
Well, there's a lot we're going to get into concerning that, your book, and some of the things you just mentioned. But first, I have to comment on the comedy portion of this. My sister is a stand-up comedian in New York City, and I've spent a lot of time at the Comedy Cellar in New York City. And I'm in love with comedy and everything to do with stand-up comedy. There's only a handful of them, right? A few thousand of them in America, at least. But it's amazing. A lot of them don't make a ton of money, but they're willing to risk all of their time and energy and effort just for that one shot. And they put so much effort. I see what my sister does as far as editing and producing shows. And sometimes she'll travel to 4 or 5 or 6 shows in the New York City area in one night, not making a dollar, just doing it because she loves it.
That's right. And here's the thing, in comedy, like in life, really, you're as good as your last audience, right? You got to reset and start over. That was yesterday. And you just got to keep hustling. I think the important thing with comedy, or whatever you're doing, as long as you're loving it, I think that's so important, because if you're hating it and showing up every day, putting in the time, it's just not going to be fun.
Yeah, that's wise words. I couldn't echo those thoughts more. So let's talk about the emotions behind finances. I never really thought to put those two words together, right? Typically, people who are talking about finances are very sort of straight edge. They're saying you have to put 10% away, you have to do this. Emotions and finance don't seem like two words you would tie together. Can you explain how you go about talking about this?
Yeah, absolutely. Well, most of us, if not all of us, most of us have secrets we have to keep, right? We've got to present well. We've got to let everybody think we're successful. And so internally, we might be thinking, I can't afford that extra drink. I can't afford that vacation, but I need to have everybody be impressed that I'm able to do it. So I'm going to spend beyond my means. I'm going to overdraft my bank account and deal with it later. And I'm just going to hope that nobody catches me in the in-between time.
Yeah, that is interesting. I think a lot of us do that subconsciously. We don't want to admit to it, like you said, and you need somebody. So do you think as a CPA, do you feel comfortable bringing that up with clients, whether it's one-on-one or a business, saying, hey, how much can you really spend? Are you overspending? Is that a topic that you can touch on, or are you overstepping your bounds?
Oh, not at all. I totally feel comfortable challenging my clients, because I'm there to help them financially. And if that includes mental financial health, that's sort of in the realm of things. I bring this stuff up with people all the time, because they'll come in and they'll tell me, oh, I can't afford to pay my taxes. Or they'll tell me this was the worst year ever, when I'll tell them how much they owe. When I push them a little bit, they'll say, oh, well, actually, we had a really pretty good year, and I actually have $500,000 in the bank. I just don't want to give up my money. Okay, well, that's a different conversation, right? Other than this victim story that a lot of us get attached to. My life is so sad, it's so hard, and it's really not.
What is considered an unhealthy or a healthy relationship with money? What outside of the example you already gave, what sort of starts that process in either a negative manner or a positive manner? How do we get on a good track if we're on a bad track?
I think the first thing is to sort of know thyself, right? Get to really understand the history. What did I learn from mom and dad? From what they said, from what they didn't say? Was money topic an argument or a conversation? Was there room for failure? And start to look at, did I grow up in a culture or a religious organization that had a certain belief around money? It was either good or it was bad, or I must be poor to be a good person. And all that stuff, starting to look at money experiences. Did I lose the milk money when I was 6 and everybody shamed me? Or did I have my first dollar saved up and mom and dad took it from my piggy bank? Like all these little things that seem like no big deal start stacking up for evidence to create our story.
Yeah, that is interesting. I don't think people will naturally look inward and think those things are connected. They just look at money again from more of a superficial standpoint. They're not looking inward. As far as budgeting is concerned, because that is something we're all told to do. I imagine this sort of plays off your last answer, that could have some like deleterious effects if you're too into budgeting, right? Is there a place where we say, hey, we have to not be so budget conscious because you're driving yourself nuts?
Yeah, absolutely. There's always a balance, and I think we have to find the balance. I know people that will spend 10 hours a day working on their budget, making sure everything ties out, and they're not even actually going out and enjoying their life because they're so busy. I have a friend who clips coupons and he does this and he does that. And he doesn't have, a couple of friends of us, we were sort of joking with him. You don't have much of a life. I mean, you've saved a lot of money, but like, fantastic. But are you actually having a good time on the ride? And so I think it is definitely important to have some awareness, even if it's just having a notebook, writing down money coming in and money going out to help, again, dissipate the story that we have. Oh, I don't make any money. Oh, I got a gift certificate. Oh, I just got $1,000 bonus. We discount all that. And then we're like, oh, I'm so poor. We have this habit of getting into a victim story when it's not really true, at least I think in the US. And so the more we can find that balance of, great, I'm living within my means, I'm planning ahead. The spending I do today is in integrity with my life-term goals and what I say that I want, so that I can actually keep myself in check.
Bob, I think this conversation is important, not just for like personal trainers and business owners, which is a lot of my audience, but for us insofar as working with our clients, because we need to understand that everyone has different relationships with money. And when you're a business owner and I'm asking, let's say, Bob, you're working with me and I'm charging you, I'm just making up a price, $65 an hour for personal training. I have to know, is that considered a big hit for you, Bob, right? Is that considered a small hit? Is it actually considered a big hit, but it's not, meaning you, Bob, thinks I'm spending a lot of money, but I actually know Bob has $2 million stacked away waiting for this. But I also think it's important because there is I don't like to coax people into this in a negative way, but I have to tell my clients sometimes, and I tell my personal trainers who I mentor, that you have to convince people that their health is worth spending the money. So you have these people who are like your friend who are cutting up coupons all day long. And it's like, well, why do you want to have the most money when you're the least able to do it? You have to keep your body and mind healthy in order to be able to use that money late into retirement.
Yeah, absolutely. And it's so interesting because the relationship with a personal trainer and their client, I mean, it's personal, right? And to be able to say, look, I'm not going to be able to pay for this month's training, or I'm in a pickle, or not being able to share that something's going on. And then, oh, I'm just going to drop you and not tell you what's going on. And then the trainer's like, what did I do? Being able to have difficult conversations, because money, it's hard to part with sometimes.
Yeah. And those are really difficult conversations, especially for us. We're not trained in talking about those sorts of things, right? You expect as a personal trainer to work for a gym, and maybe that money to be discussed between the gym and the client, right? And we would be a third party just training and then cashing a check. But that's not always how it happens, especially if you go from a gym to being an independent personal trainer. You're eventually going to have to write out contracts, and you're going to have talks with people about money. And that's going to lead into my next question, because sort of a new wave thing for us as personal trainers is we make people now sign annual contracts. And again, we're not trying to get over on somebody. We're telling them if your health and wellness is worth it long term, you need to buy into it. So you should sign an annual contract rather than doing that. Do you think that's, from a mental standpoint, talking about this emotions of money, is that good for the client? Is that good for business? Have you heard of those sorts of procedures before?
Yeah, I think something like signing an annual contract is a great thing. It makes me have skin in the game, right? If I'm able to cancel and just not show up, whatever, it's not that important. If I'm paying for it, I'm going to, at least for me, I'm going to show up and I'm going to get my money's worth, right? Because I am frugal. So I think though it helps people set that mindset of, I'm making a commitment, not just I'm thinking about it for tomorrow. I'm actually thinking about it long term.
Do you have any, I guess I would say, macro thoughts on personal debt? Are you one of these people who say, hey, you have to pay the smallest thing off first and then the biggest thing? Is it something that is like an absolute must? I need to budget and get this debt out of the way. What is your sort of macro thoughts on personal debt?
So I definitely am not a fan of debt. There are some times where it's awesome and it can help you do things that you might not have otherwise been able to do. It might help you get a business started in the beginning.
Yeah.
But when people come to me and they have debt, there's two things I want to do. One, I want to get rid of the debt, but I also want to create at the same time a habit of savings. And so I'm not going to just fixate on paying off the debt, because then I'm just focusing on, you have to do this task and it's going to be painful, and we're not learning a new task to replace it. So for me, I want to, even if I'm putting away $20 or $50, I'd rather pay a little less debt down so that that's right. And I'm building this up over here so that I can actually see the fruits of my labor. Whereas if I'm just paying down debt, it feels like forever, especially if you've got 5 or 6 or 10 credit cards. It just feels unsurmountable. But definitely pay the small ones first, so you feel like you get a bounce, some momentum, and then really look at which ones have the highest interest rates, which I'm surprised how many people will tell me, I don't know what the interest rates are. Really? It's right on the credit card statement. You're paying 20%.
As far as investing in yourself, right? One has a business, one is planning on starting a business. Are there theories about how much I should be investing in myself? Let's say if I'm taking in $100,000 a year, should I only be spending X percentage of that $100,000 towards my business?
Well, it sort of depends on the business. I think it's important when I'm sitting down to start a new business or I'm talking to a client about it, what's the amount of money I'm willing to budget for that? Whether it's over 3 years, a year, 6 months, I've got 50,000 that's just earmarked for that. I've got 200,000, whatever it is, I keep that separate so that when I'm getting close to tapping out that money, I can stop and say, wait a minute, am I almost there? Am I kidding myself? What do I need to do? And do I invest a little bit more money? But I think it's important to just segregate that money and figure out what your comfort level is. I've had a couple of clients, more than a couple, where they want to start their own business, and we just slowly phased out their 9-to-5 job. So they started working 3 days, and then it took them about 3 years to make the final jump and let go of that security. So for everybody, it's different. But for me, that's a great way for those people that are a little iffy, is to find that way to bridge to your entrepreneurship.
Should we all have a financial advisor? Is there a situation in which you could imagine, and I'll make up a scenario. Let's go ahead and say Steve is a personal trainer. He works for a country club. So I am an employee of said country club, and all I have is one document, one W-2 they send to me. Can I just use TurboTax? Do I need a financial advisor in that case?
In that case, W-2, TurboTax, going to work just fine. So there's a distinction between financial advisor and tax preparer,
sure,
and accountant. So a financial advisor is going to be somebody that maybe is sometimes just a money therapist for you. You may just be making a W-2, but they might be saying to you, what do you want to do long term? What are your goals? How can we help you achieve that? And so that may have less to do with, what do I owe on my taxes? And even a W-2 person that maybe doesn't have a lot of tax deductions would benefit from at least having a conversation with a financial advisor. There are a lot of people that come to me and I'll tell them, I can't help you. You've got a W-2. You're going to pay me lots of money. You're going to overpay me, and you could probably have somebody else go do it and they'll get you the same result. Where I help people is because I work with entrepreneurs. I work with tax strategies, and we're pre-planning. So when we get to April, there are no surprises because we already figured it out in November.
Is there a big difference in your profession from one person to the next? And let me expound on that a little bit. So as a personal trainer, Bob may come to me with your goals, and I may meet those goals completely different than another personal trainer. Maybe this other personal trainer is big on using kettlebells and body weight, where I'm big on using bands and doing more yoga, things of that nature. Are there big differences like that in your profession?
Well, there are definitely people that know entrepreneurs that definitely work with small businesses. I work with a lot of people in entertainment, which a lot of people don't. And so they may not take the deductions that a client's entitled to. There are some people that just work on corporations that have no idea what goes on a personal return. So there are a lot of different types of accountants and a lot of different types of tax preparers. You want to find somebody that aligns with you or can fill your niche.
Makes perfect sense. And I tell that a lot to actual clientele, the general public. When you're looking for a trainer, you should also try to find a trainer who understands your lifestyle. Meaning, if you're a parent and you have 2 toddlers and you're working with a 19-year-old who's never had a kid, well, they don't understand that you can't set times all the time to work out, right? You should have somebody who understands the lifestyle. And I'm sure the same thing, if I'm working with Bob, who's been in comedy and understands the deal, you're better off working with people in entertainment who knows, hey, I might have a bunch of money coming in one year. I signed a contract. And then the next year I'm just running around looking, trying to get my next job. So I need to budget differently than the average 9-to-5er.
Yeah, absolutely. And even talking about that with strategies, if somebody's working a job, making $200,000 a year, I might and they want to buy a house. Yeah, go buy a house. I'm working with entrepreneurs. I'm working with entertainment folks. I'm going to tell them, go buy a triplex, go buy a duplex, let somebody else pay your mortgage because your income fluctuates. You may not have income for 2 or 3 years. So yeah, it's great to get a house, but let's do something that's going to actually pay for itself.
Yeah, that makes perfect sense. Can you talk a little bit more about the comedy? I know that I don't know if you're currently still the CFO of the Comedy Store or you were. Can you tell me what brought you into that? Was it a financial decision? Was it a love decision? Was it a combination of both?
Yeah, combination of both. I think I was actually doing stand-up at the Comedy Store, and a friend of mine who was also performing was friends with Mitzi, the owner of the Comedy Store. And apparently she had said to them, hey, we're having some financial problems. We owe a bunch of payroll taxes. We're in trouble. And so she go, oh, call Bob. He'd love to do that instead of comedy. And I was like, thanks. So Mitzi called me up and she was like, Bob, you got to help us out. We owe payroll taxes. And because I was doing comedy, I was running a show at the store, and they have 3 rooms. As opposed to a lot of clubs just have 1 room. I was like, I gotta help keep this place open. This is where my friends perform. This is where I perform. And so it was more begrudgingly. And actually for a while, I didn't even tell people I was doing all the accounting and stuff there. I just wanted to be a comic, Yeah,
that's funny. Well, I mean, it helps to make sure that your side gig and your other business is run by you in the background. At least you trust the finances now going
exactly.
So I want to talk a little bit about price setting for a service. I don't know if you have any, information that you can give or advice, but again, entrepreneurs, we have to price set a particular number based upon a ton of different variables. And if you have any advice or any thoughts on that, feel free to spit them out.
Well, interestingly, I have a lot of people that come to me and say, I think I need to raise my rates, or what should I charge? And what I found, I'll say, what do you think you should charge? And if they tell me 100, I tell them charge 125. Add 25% to whatever you say, because you're probably undervaluing yourself by at least that. It's important to find out what are other people charging that are doing something similar to you, so that you can get a sense of all that. But I do think it's important to actually know that rate, feel comfortable saying it. Actually, maybe talk to a friend and talk it out, because a lot of people, oh, you're great, I want to sign up with you. What's going to cost me? Right? Because now all of a sudden we're putting ourselves on the line, and now the price might be too much, and now they've judged us that we're not worth it. And then we have to go through all that. So I think it's definitely important to practice having those conversations about what you're charging and saying it out loud. My rate now is $450 an hour. And I was mortified when I was charging 175, and I had to just practice. Well, it's going to be $200, and nobody flinched. And when I raised my rates, nobody got upset. It was me that was having this internal struggle of, oh my God, how could I do that? It's easy. I love what I do. I shouldn't charge so much. And I think a lot of us do that.
Bob, I mean, you are preaching to the choir. Personal trainers, a lot of us who love what we do, that's the first thing we say. It's not that difficult. I've been doing this for years. This hour, I enjoy working with my clients, so I don't need to charge that much. But it does come back to bite you in the butt. And I will also say that, price setting again is very difficult for us. But one thing that I notice that people do is they fluctuate too much. So they'll put a price up, and maybe they won't get it right away. So they think something is wrong with the price, and then they drop the price, or they raise the price, or they keep moving the price. It's like sometimes there's other variables than just the price not getting you what you want. It could be time of year. It could be just that, people are not working out at that time. It could be your marketing is bad. I wouldn't focus on lowering and raising to try to find that perfect price point. You have to leave it there for a little while before you manipulate it.
Yeah, absolutely. And I think to your point, you might have the exact right price point and the wrong audience.
Yeah.
And if you don't slightly adjust the dial, you're going to just keep running up against a wall. So there are a lot of factors, and having a financial advisor or somebody to talk through some of that, or a coach to just really help you laser focus on the pricing and who you're trying to reach.
Now, personal trainers aren't necessarily in the entertainment business, but now due to the pandemic, it's sort of expedited our online fitness career. So you had a lot of people who were in gyms are shut down. Now they have to do things like this. We're working through Zoom one-on-one with our clients. So we have to buy different equipment. When maybe it's an extra laptop that we didn't have before. Maybe it's a microphone so we can speak to our clients, and video cameras and things of this nature. Do you tell your entrepreneurs who are doing this sort of things that they can write all of this off?
Absolutely. All of my clients know, if you're not sure, put it on the list. The worst thing I can say is we're not going to deduct it. So don't be self-determining that that's deductible and that's not deductible until you actually sit down with somebody that knows. So I tell all my clients, if it's in the gray area, put it down. Clearly your groceries, unless you're buying food for your customer, your clients, that might be something different. But for most people, if I'm going out and buying toothpaste and underwear, that's probably a personal thing, unless I have a really weird job. And so I just tell people, if you're not sure, put it down. We'll have a conversation about it.
That is something very interesting that I did ask a tax professional once, I believe, is that if we are in the nutrition game and I'm meal planning for a client, I could hypothetically go to the store, right? Buy this food, try it out myself, let's say weigh it, measure it, taste it, and then recommend it to my client to buy. So then I could hypothetically retroactively write that food off because I am building my client's diet, correct?
Absolutely. Research.
Research. Yeah.
And it totally makes sense. I mean, that's the kind of stuff you want to be able to do for a client that's going to give you a leg up over your competitor.
But that's why we have somebody like you in order to bounce those ideas off of, because you as the independent personal trainer have enough to worry about. You're not going to know all the little nuances of what you can write off and what you can't. And you need a professional in some respects to make sure that you're writing the right things off. And I'm sure you could speak to this. It always pays itself off, right? Have you ever had a situation in which somebody hired you and you said, you're on the losing end of this?
For the most part, there have been occasions where somebody will try to squeeze something in, and then it's clearly personal. But for the most part, I think if you can advocate and there's a good, reasonable justification for it, the IRS, as long as it's a good story, not always nonfiction, that's really what we're looking for. Is it doesn't make logical sense. If somebody else were looking at this third party, would it make sense that this is a business expense?
Tell us a little bit more about your book. What haven't we talked about that's in your book that you think is important for people to know, just general population?
So the book is really a combination of book and workbook. There are calls to action at the end of each chapter. It's really about starting to get conscious about what we say. I know a lot of people in LA, I'm broke. When in fact, they might just be cash poor at the moment, but they've got a $2 million house. They just went to Europe. They're driving the newest Tesla. They're not broke. Or I need this new phone. I need this. really starting to look at what I want. And so being really conscious and intentional around the words we pick, and the words that we use. And it just goes through the different emotions. So different things come up for different people, right? I might be coming from a place of, oh my God, scarcity. There's never going to be enough. I've got to save. I've got to get every scoop of peanut butter out of the peanut butter jar because I could go bankrupt if I left out one scoop of peanut butter. And I'm a little obsessive, but so trying to figure out those places, it doesn't mean you always fix them. I still get triggered and get angry about certain things. When I talk to some of the IRS people, I get really angry. So rather than say, Bob's a bad person, he gets angry, I call a staff person and say, finish this conversation with the IRS person because I'm just not in a place where I want to have it. And so learning strengths and weaknesses, am I a saver? Am I a spender? And then how do I outsmart myself through automation or whatever so that I can actually get ahead? But it's just really going through the emotions. What are my fears? So many people have a fear of success. So many have a fear of being seen or being judged, or, it just goes on and on. But to explore all of those things through the book and really get familiar with what your story is and how that unconscious GPS is driving your life.
How did people react to the book right away? Have you had people come out and say, I wasn't expecting to hear all of this stuff, to be looking inwards? I was expecting more of just number crunching, or do they really enjoy that portion of it?
Well, actually, the biggest comment that people say to me when they read the book is, wow, I felt like you wrote that book for me. And for me, that was a real compliment in that I'm touching on something that seems to resonate with everybody, even if we don't go out and admit it. And I think for me, that was really important to start to admit to people, hey, I have things I want to present well. I don't want people to know that I failed on this. I've also found that when I admit those failures, it's a lot less pressure. Instead of trying to be this magical, perfect person, just being able to say, man, I made a lot of mistakes. And so I think the book gives people permission to look at themselves. One of the things I really stress in the book, and when I do workshops and when I do talks, is to just get really curious. Wow, isn't that interesting? I love staying in debt. Wow, isn't that interesting? I never seem to get ahead. Wow, isn't that interesting? What is it that I like about this that keeps me safe?
My first thought comes that when you read these like financial books, that they're always really sort of like objective things that you want to do. But I think by you having a little bit more of a, what I would call like a zoom out approach, a subjective approach, step back, analyze yourself. We learn so much. And I have a book behind me, Fitness Business 101, What the Certifications Don't Teach You, that I wrote. And I do the same thing. Funny enough, is that I divide trainers into categories where some of us are direct and some of us are demonstrative. So what I mean by that, Bob, is some trainers are very scientific and math-based, where they can look at Bob's body and say, you know what, Bob has some bad posture and knee valgus, and his chest is too tight, and he's got tight hip flexors, and we need to do A, B, and C in order to get him to the right place. And some trainers are more demonstrative, where they have sort of, I call them trainers, like, they have big, bold personalities, and they want to put on a good show in front of the class and make things fun. And part of being a successful personal trainer is knowing what style you are a little bit more, and then catering your business to that. So if you're more math minded, you want to do assessments, you want to assess people, you want to give them plans. If you're big, bold, dynamic personality, you want to have a big class in front of you. You want to present a show and be an trainer. And I think it's important that we know who we are to be successful, not only in doing the good things, but in your case, in avoiding the bad things.
Yeah, absolutely. And, it's interesting, as a CPA, I have legal liability, right? If I give you bad information, you can come back and sue me. So I think for a lot of accountants, there's this, I better say it right or not say anything. So I don't get in trouble. I was the guy in continuing education classes going, hey, that's a big word. Could you explain it? I have no idea what you're talking about. It's more than 3 syllables. And, everybody around me is like, thank you, thank you, thank you. But nobody wants to ask the question. But I want to be able to talk to people in layman's terms. And I don't always understand stuff when you get real highbrow and really sophisticated. I'm just like, what's the bottom line? And so for me, I want to keep it real for other people, because I know most of the time I have like 10, 15 minutes before they mentally check out when we're talking money.
I mean, that makes perfect sense. And then also, there is no point of using that jargon with the commoner, because I'm not going to understand what you're talking about. Yeah, maybe for the first 10 seconds, they go, Bob sounds smart. But eventually, now I'm trusting all of my business to somebody who I didn't connect with. And I'm just hoping they're doing the right thing because they sound smart. So I even say at the personal trainers, it's okay to here and there explain the anatomical parlance behind what's going on to your client. But really, your goal is to break it down and simplify it so that they understand where you're coming from a layman's perspective.
Absolutely.
So give me a mistake that you see you can use entertainment, because I know that's the people you work with, and I'm sure a lot of it crosses over. As far as taxes are concerned, that you see that you wish people didn't do and that you'd like to pass on. What is a common mistake that people do for people who own their own business or don't do that you wish you can tell the public?
So this is one that also is personal trainers as well. They'll come in and they'll tell me their total receipts, right? They'll come in and say, I made $50,000. And if I just go with that, great, I pick up the 50,000 and we do that stuff. But then I discover that part of the 50,000 was $20,000 from a gym that they worked at and they got a W-2. And some of the money was from some capital gains on some stock they sold. And they get treated differently. But a lot of people, oh, that's all the money that went in my bank account. That's the money I made. And even in entertainment, they'll get a W-2 from Disney, but then they'll get a 1099 from something else. And what they're doing is they're paying double tax. And so it's really important to really segregate out the different kinds of income. So we know this is W-2 income. This is 1099 income. And the other thing is a lot of times entrepreneurs, they want to not spend so much time running the numbers. They'll just total their deposits. They'll run through the bank statements and look at some of the ATM stuff, and they'll miss the fact that somebody bounced a check on them. And down at the bottom, there's a redeposit. And so they might have ended up picking the income up twice or not deducting the fact that the client bounced a check on them. So it is important to look at all of it instead of just, oh, let me ballpark.
I feel like I know this answer already, but I want you to say it so that they hear the experts say it. A lot of us in the personal training business get paid through these new age apps, Venmo, Zelle, sometimes, PayPal, all of these things. Explain why it's important, unless you believe it's not, to make sure that we're also reporting this.
Well, one main reason is now most of them are reporting it. So if you don't pick it up, and pick up that 1099K that's going to show up from Venmo or PayPal and all that stuff. Look, at the end of the day, if you're putting money in a bank account, it's traceable. And when the IRS audits you, they're going to say, did you get any PayPal? Did you get any, Venmo or Zelle or all those different things? At the end of the day, if you're making money, let's find expenses to bring that down, but let's pick up the income. As an accountant, I think this is true for a lot of accounts. We want to know exactly how much we made. So we're going to report every freaking dollar so we can go, look at that. I made my goal. But then I'm going to try and find every expense that I can within the law and bring that number down. But it is important to report that money. They're going to, if you get audited, you're going to get caught on that. And then you're just staying on the radar. Schedule C is the most audited schedule of all the tax returns and of all the schedules. And so you want to make sure you're reporting information that is reasonable and is accurate.
Bob, this has been great information. Where can the listeners find more about you and your book and everything Bob Wheeler?
Absolutely. It's themoneynerve.com. That's nerve, N-E-R-V-E, not nerd. I'm a money nerd, but it's the Money Nerve. That has access to the book. I've got a podcast, Money You Should Ask. I have an online course, Mastering the Emotions of Money. There's resources there that are free that people can read, download. Feel free to reach out to us. There's an email, info@themoneynerve.com.
My guest today has been Bob Wheeler. Bob, thanks for your time.
Thank you so much, Steve.